obviously the Euro Swiss that makes the Euro Swiss very bullish. But what that also makes is the dollar Swiss at risk of a little bit of a squeeze. So I'm looking right now at resistance at, you can see I have a alarm set at 92 40, because if it squeezes past 92.40, then I might be adding here. So 92.40, we are bearish, but keep in mind that this support 91.80 is now pretty key. Okay. Or whatever the lows were, 91.68, 91.70. So let's just write 91.70, 91.70. This is going to be pretty important because we might be creating a false breakdown in the Swissy. Like I said, we start getting back above 92.40, and next thing you know, we got a short squeeze going. Okay. Just something to pay attention to. Dollar yen. Dollar yen was a bearish break below 108. 106, I'm sorry. I said 108. 106, big support, broke. Okay. The 161% extension of this move is at 104.78. That is going to be support for today. 104.78. Okay. Now, any move back to 106 should find sellers. That's a bearish trend. Okay. If you look at the dollar yen, this is in really, if you look at the more of like a daily structure of the dollar yen, it looks something more like that, right? It's a bearish wedge breakdown. Went through a big consolidation phase, finally broke down. And frankly, it looks like the dollar yen's going back down to 104.50, maybe even down to 103 in time, right? And if you use Forex Analytics, you knew that we started getting really bearish actually on Friday on the break below these levels of support. So here's your active pattern in play from Friday. All right. So the dollar yen bearish. Let's go over to dollar index. Okay, let's take a look. Let's take a look.
Blake, I'd also like to stress that was pushed after face, and just another reason, I know it's only one trade, for you to have a membership with us so that you are alerted to things after face.
Oh yeah, okay. The face webinar. I mean, I go through this analysis, but a lot of people have they have trouble with the actual execution part. Like, because they need too much confirmation, or they,
look, we're just looking for,
it's got to be perfect.
Keep it simple.
Yeah,
it broke support. You get the alert. It's on your phone. You're out there, wearing your mask outside, and you get the alert, and you do the trade.
Right.
If you agree with it, but you're not going to get all of our stuff here in face. And you know what? Think about it. How many of you guys out here trade standard size contracts? You guys, or you're not all micros, are you? So what you're talking about is giving up 10 pips, which you risk every time you click.
Dale?
Yeah.
I'm sorry. I think we have data coming out.
Okay.
Hold on.
Yeah, we do. Durable goods orders, month on month, slightly.
I am a hedge fund,
worse.
Gregorios.
Core durable goods slightly worse. Durable goods slightly better. Basically nothing. So
yeah, they're right here.
Too much attention to it. Yeah.
Okay, sorry, Dale. I didn't. Okay, you can continue.
That's all right. Anyway, Gregorio says I should be a hedge fund. In fact, I'm hedged on everything, Gregorios, including spirituality. Bar mitzvah at 13, baptized at 40. So I have my own hedge fund. Go ahead. Anyway, I'm just stressing that you're not going to catch all of our most of our good stuff happens in members chat and push alerts from the team working 24/6 pretty much. So that's it. I'm through with
Yeah,
my
yeah, especially
yelling
like,
at everybody to join.
well, you know, like Grega's alerts and his and same with Andre, those patterns in play, a lot of them trigger in European trade, and you know, when I'm asleep, or you know, and so you know, they happen around the clock. It's not just you know, not just a North American phenomenon type of thing. So yeah, anyway, thanks
All
for
right.
bringing all that up, Dale.
All right.
Let's talk about the dollar index, because the dollar index is at, you can see this. This is pretty important support that we're at today. I mean, you can see this is the dollar index from 2011, basically a trend line coming into play. We got some horizontal support. We have the flag completion right now. So, you know, I expect the dollar to find some footing. Now, does that mean that the dollar is going to, this is it, like the dollar is going to bounce from here? No, realistically, this might be a day of consolidation before the dollar continues lower. So if you guys are thinking at this point that oh, this is going to be it, this is where the dollar bounces, and you know, we you know, the euro comes back to 1, 12, I don't think that that's the case. Okay. I don't really think that that's the case.
My
So
stimulus check, Blake, that I don't get is worth less in U.S. dollar terms. I'm requesting that if I get one, that it's in euro.
you're going to request that you get paid in euros? All right. So I'm going to write down that the low of today, which is 93.61, that's going to be support, because this is, actually, you know what? I take that back. I'm going to write down 93.50. I think 93.50 is support. That's that long-term trend line. I'm going to put an asterisk there. And yes, we're bearish, but you have to be really careful because we are, you know, near some really key support. Now, any bounce in the dollar index, you know, looks like 94.10 will offer some resistance. Okay. The US dollar Norwegian krona. Now, this is a currency pair that I think is at probably some very important support. Okay. You can see this trend line coming into play in the US dollar Norwegian krona. This is a long-term weekly channel support. Let me move that channel support a little bit. Okay. You can see intraday, we're testing all of this support here. Relative strength is very divergent. So 903, 904 is going to be support, but man, I don't know. I wouldn't want to be short down here, especially with the Aussie and the Kiwi underperforming, you know, and the Canadian too. Yeah, you got to be a little careful. But it is bearish, and I think while we're below, you know, 924, looks like 924. Yeah, it's, you know, it's bearish. All right, let's talk about gold at all-time highs. Now, I don't think there should be anybody here, Dale, that is listening in that it should be bearish gold or silver, right?
Not over the last many. Well, I don't think that you've been bearish.
Well, if you listen to
golds.
Stelios, you're never bearish precious metals.
Yeah.
But remember our conversation for the last few weeks. You don't want to be short precious metals. I mean, if you look at this is a possible repeat of what happened post financial crisis. We have a very similar situation where balance sheets are being expanded by central banks globally. And if you look back, you know, at this move that happened 2009, 2010, my argument is, why can't this happen again? And you might say, well, it's happening now, but look, balance sheets have just started to increase since, like, big time since here
last fall, really, when we had the issues
Yeah.
in the repo
Yeah, and
market.
if you want to just say during the pandemic, from basically this year, you're talking about a possible move like this over the course of the next couple of years, and I don't think that's uncalled for. I don't think a move to 2,500 in gold is going to be uncalled for based on what central banks are doing. So, with that being said, you guys shouldn't be short, gold or silver or, any of these precious metals, and this has been the argument for weeks. Although I've been, long physical gold for a long time, and I've just been hoping for any type of dip to get a buy-in. But now, you gotta just hope and pray that we get some sort of dip, maybe back towards 1860, but then you'd have a possible double top. So I don't know if that's going to necessarily be the case. I think the risk still is for gold to continue higher. The question is, how much higher can we go? Because now for today, you have to imagine that 1920 is going to offer support, because this is a very bullish breakout, right? 1920. That's the previous all-time highs, 1923 actually, but we might get a dip down to, I'm trying to be pretty granular here, and I mean, maybe you get a dip down to 1900. So, and this would be 1923. Okay. And now, I mean, I guess resistance is at maybe 1945, maybe. But do you really want to stand in the way? I wouldn't.
I tried it.
You tried, yeah. I mean, it's like you get run over by a freight train.
Yeah,
S&P, and then it's bound to happen. I mean, you like gold this is now a one-way train. It has been for the last few weeks. You just guys got to. I tell people in our chat room all the time, look, you get on the train or you get out of the way. That's it. You don't stand in front of it. Not these moves.
Once it got over 1820, Blake, it became a throwover, and one of the biggest throwovers I could remember in my career. I mean, extending above the wedge, you had to. So,
I'm listening to you.
Yeah. Well, you had that wedge, and right around there at 1820, and once it accelerated through,
right,
it became a runaway market.
Yeah, once it goes over, yeah. All right, so
maybe that's a natural place.
The S&P, we've got to while we're above this 3,200 or 3,195, we got to imagine we're bullish. Look at the dollar Canadian, man, what a bounce. We got to imagine that it's still bullish, but I'm a little worried with the S&Ps here that we're not able to capitalize on this rally. So 3290, I think, is going to be resistance. I think it's still bullish, but be careful, because if we break through this support, 3195, it's going to change us from being bullish to more of a range. Okay. Then we're going to be like more bouncing around. Then we're going to have to start to be careful with, some of this like.
It looks like it could put in a right shoulder here, Blake, and break under that level you're talking about.
Maybe head, shoulder. It's possible. Yeah, it's really early, but it's definitely possible. Yeah. So anyway, that's kind of what I see right now. This is your bias chart. You guys want to take a picture of this? Whoops, hold on. There we go. And let's talk to Stelios for a minute and see what he's thinking. What's up, Stel?
Peel him off the ceiling.
Good morning.
Good morning, Stelios.
that guy Steve, such a slacker. He's on holidays again. I can't believe
that guy's on vacation. I'm just happy for you guys that you guys get to go on vacation.
We are
as an American. I'm stuck.
I'm envious.
Yeah, I mean, I'm stuck.
Not happy for them. jealous.
Yeah. So,
Well, that's the difference between you and me, Dale.
I know, Blake.
I want great things for everybody.
You
just
are really- Yeah.
me.
I'm completely self-absorbed individual.
You are
yeah.
completely self-absorbed. No, I mean, look, I'm definitely jealous. I wish I was at a resort, sitting on the beach right now.
Yeah.
Instead, I can't complain though. I mean, I try to explain to my kids and my wife, like, I'm happy being bored through this pandemic. I'd rather be here and bored than in a
Sick.
hospital. Yeah. Or
Yeah.
sick. It's like you can't really complain about your not being healthy at this stage in the game. However, I am jealous that I wish I was up.
Okay, there you go.
Yeah.
Now
Anyway,
you're
Alright.
being an American. All right.
yes. So Stelios, what's happening today?
Well, two main things. I mean, you talked about a lot of stuff, but two main things for me. One, metals. The second one is the dollar. And metals, there's not much more to say from what you did. New all-time highs in gold. I still think, obviously, in the long term, we're going a lot higher, but there has to be a correction at some point. And I was looking at the DXY index. There was a pretty good support at around 94. 94.10, something like that. I was talking about that for a while. It was the ascending trend line on a weekly chart from 2014 lows, and it just went through it. So that was, I was scratching my head a little bit. I thought it was gonna hold there, and it's gone under. And also gold making new all-time highs. Could this be a little bit of a false breakout / breakdown in the DXY? It could be. Can we see a little bounce in the dollar? I think it's long overdue. Sentiment positioning pretty bearish, and we should see it. The question is when, and do you get ahead of this steam engine? I wouldn't, but I do think that it will come. But like you said, same with the euro dollar. Any dips, I think, should be bought. So FOMC this week, correctly, as our friend David said, that might give us a little bit of a, if Powell is not dovish, if he shows any signs of kind of neutralness or even hawkishness, obviously, I think we're going to see the dollar recover a little bit.
Are they having a press conference at this meeting?
For the Fed?
Yeah.
For the FOMC, I believe this is a Fed meeting with the press conference.
Yes.
Yeah.
Okay.
Yes, there
half
is
an hour later.
Thank you, guys.
Yes.
Yeah. So, Stelios, you were talking about this trend line in the dollar index. So the dollar index trend line that you were talking about is in red. And if you take the lows from 2014, this is what Stelios is pointing out. We're through it. Here's my argument to that. If you go to the lows back here in 2011, and this is what when I try to draw trend lines, I try to go through multiple points of contact. So 1, 2, you can see all the support that you're referencing the spike low in 2014. I'm going through some of the other lows, then through the spike low here. That actually takes us to where we're at right now. And then on top of that, remember, we follow this pattern, this bear flag pattern has now completed in the dollar index. And so I would argue that we have to be very, very careful with dollar sales here. You know what I'm saying?
Yeah. And it's funny how timing works, right? We've completed this bear flag. We've come to the ascending trend line, the one you correctly noted, and it's FOMC week. So, it's all coming together. If we see something on the FOMC which is not really dovish, then I think we might bounce.
Yeah, and people are expecting a little bit more dovish Fed, and you're right. I mean, this could be this.
How could they be any more dovish than they already are?
Well, I mean, they can be. I mean, because they can start controlling.
You can always do more of everything.
Yeah. How about some nice little yield control, right?
Yeah.
Yield curve control, which has been a big talking point. But let's say that's really not a topic of conversation right now. The dollar could actually bounce, and that's what Stelios is pointing out, is that we have the potential of the dollar creating some sort of low this week. I don't think right now is the time where you're like, okay, the dollar's gonna, this is it for the dollar. I'm gonna get long the dollar, and unless it's like a counter trend, just want to stick around for a little bit. Like, look, I bought the dollar Swiss today. I realistically should probably take off my 5 pips right now and just get out of it. But I'm just kind of scalping around at this point. This is not I'm buying the dollar Swiss and I'm going to hang on to it for the next, I'm going to hang on to it for the next 2 weeks. But this week is a week where a significant low could be formed if a lot of things come into play, right, Stelios?
Absolutely. And we have to put things in perspective. And my view is, yes, we could get a bounce in the dollar, but with that bounce, I will be looking for points to get short. Not necessarily dollar pairs, but maybe get long silver again. I put a take profit level in silver. The $26 is a huge level. Everybody's looking at it. That's why I put mine at 25.15 or something like that. I can't remember exactly how many cents it was, but it's not there yet. But I think it's going to get hit. And once the dollar does bounce, I'm going to be looking to buy more as metals go lower, which I think they will at some point a little bit. So that's my focus. I'm not losing focus. I think the dollar is going to bounce, but it's going to be a selling opportunity, in my opinion.
Okay. All right. Well, that I would agree with you. And so, like for me, I'm really hoping the dollar bounces to a point where the euro gets back down towards like like maybe like the high 115s. Maybe like maybe even the mid 115s, and then we can try to play it back on the long side, because I do believe that this 115 level is major. So any type of dip from here, I want to be long. And but now it's just hoping that we get that kind of, we get that move. That's what I'm hoping for.
Yeah.
So yeah. Hold on. Go
there
ahead.
I was going to say there are other things looming which can affect and probably will affect the dollar. We have the new stimulus plan, which is expected to be unveiled today. It's going to be around 1 trillion, and that's the low end. This is what the Republicans want. The Democrats wanted something like 3.5 trillion. Funny how we talk about trillion, 1, 2, 3, 4, or whatever, like it's nothing. But it's going to be on the low side. Probably more direct checks. That goes for you, Dale. You don't get that. But yeah, checks and stimulus in various forms. So that's another thing that could move the dollar.
Dale's like, euros, please. Euros, yeah, euros, please. Yeah. Please pay me in euros.
When was it? This reminds me, I think after the crisis in 2008, when the dollar had the big fall, I remember there was some American rapper on his videos. Instead of showing dollar bills, he had euros. You remember that? That was so much fun.
I don't remember that, but yeah, that's the whole Giselle thing.
Yeah. Oh, yeah. True. That too. But I was laughing at that actually. But yeah. What else? So we have that out of the US. We also have more developments in terms of the COVID situation. We have more travel bans, and cases are rising in China, India. I'm reading. I mean, obviously, I'm not there, but I'm reading they have huge rate of increase, something like over 1 million cases last week, which is scary. And unfortunately, it doesn't look like this is over. Will there be more shutdowns, lockdowns of the economy? I don't think so, but it might be voluntary by the people, like we've said before, because if things get difficult, you're not going to be out there doing stuff, are you? So, that's another front which has kind of been put in the background. We had the news from Moderna, who are saying they're going to be moving into phase 3 of their testing. So, there are steps being taken, and hopefully we're going to have something for next year. But this year, I think we can forget about it, and with whatever implications that has to the economies and general health situation. So, there's still a few things going on that could move things, but really the FOMC is the main event. Speaking about data, we also had some IFO data out of Germany. The usual thing: current assessment worse than expected, expectations better than expected. So really things are not good, but it's going to get all better, and I hope that's right. And that's really it. I mean, otherwise, equities continue their little road of no worries at all. Obviously, they have a day or two of down moves. We had that last week, but really, the S&P over 3,200 is still it's still looking pretty good. I still think we're going to see a proper leg lower at some point. Where is it going to be? I don't know. I know I'm not a magician, but I think we will see a leg lower, and that might coincide with a spike in the dollar. I will be looking to get long equities at levels quite a bit below here. So that's my strategy.
So hold on really quick. You should we got a couple comments about the big dam in China, about its maybe in danger of breaking. I don't know if that's going to have any hold on really quick. Sorry, I'm talking to the guys in my office really quick. Sorry, I just was letting these guys know in Connecticut that I'll be a little late because they don't know that Steve's on vacation. What happens at my office and what happens with Forex analytics are two totally different things. I mean, the guys in my office in Connecticut know that I do Forex analytics stuff all day, but they don't. It's more of like I just kind of tell them, hey, I'm dealing with this right now, and they know that I trade. And
Steve is creating more problems, right?
Steve is creating some waves right now. So, and obviously we're seeing some moves. And I was just going to look at the euro, and I wanted to talk about the dam, which is a very very it could actually move maybe equity markets. I don't know if it's really going to be much of a influence for the dollar. Like for when I look at the dollar may get a bounce. And I think, let me explain this actually as a just generalization. The dollar is a safe haven currency, but we have to see a big financial shock to move the dollar up aggressively in a period of risk aversion. Like what we saw when the whole world went on lockdown, the dollar went straight up for a couple weeks, and then it obviously has eased off. Unless the dam, the Three Gorges Dam in China breaks and it floods all of China through Indonesia and spills out into Australia, which I'm obviously being very sarcastic right now. It's probably not going to move the dollar much. We might get a little bit of risk aversion. The dollar might bounce a little bit, but not.
Would it be more significant than if Hoover Dam went? Is it the magnitude of this?
Brock says the drug manufacturers downstream of dam, but I mean, is it going to be a point where it really knocks them out? But I don't know because I haven't done enough research, and maybe it is. Maybe that is a big risk. I don't know. Do you know, Coach?
I don't. I was wondering if it was as big as the implications if anything ever happened to Hoover Dam. That, Arizona would be in trouble.
Right. So anyway,
that's all you need now, right?
but will it move the currency markets? That I don't know. But also a couple other the other comments that our attendees know it's 5 times bigger than Hoover from DJ. Yeah, I mean, I know it's like the biggest dam in the world, right? So
damn.
What's that?
It's a damn big dam, isn't it?
It's a damn big dam. Damn. Yeah. I mean, Scott said it would be a 360-foot wall of water. I mean, that sounds pretty massive. All I have to say is I'm kind of glad I'm in the desert right now. As a result,
get my surfboard out.
Yeah. So hey, let's. We got just a few minutes before Dale does his interview, and we're obviously not going to get to a lot of questions, but I want to. And remember, when you're. Oh, this is what I wanted to say. When you're using Forex Analytics, you have. I can only do so much analysis throughout the course of the session, and by the way, a lot of these. Resistance levels will be updated here in the next couple hours, and support levels for all of these assets. One of the things that's moving is Bitcoin and Ethereum. Now, if you want to see what, look at our lights. I was going to actually make point of this on Friday. You don't see this that often, that we have all green indicators on both Bitcoin and Ethereum. That was as of last Thursday, I think it was, because when I made the last adjustment for Ethereum to turn bullish on Thursday, it was because we finally broke this. Let me show you on Thursday. Oh no, it was I'm sorry, it was Bitcoin. It was like last week when we finally broke through here. I'm like, okay, that can finally turn green. And Ethereum was already green because it went green when we busted through this this flag or triangle. But look at the massive squeeze in Bitcoin, Ethereum. Bitcoin's approaching really key support here, but we have, or resistance, I'm sorry. But I was going to make note of it actually on Thursday of last week. This is the first time that I've seen us have all green indicators on cryptocurrencies in a long time. So that was and obviously we're now approaching some pretty key resistance
and Blake, remember we started to talk about cryptos a few weeks back, not a long time ago, but a few weeks back, and on Face, in the chat room, on the weekly newsletter. It's like something that was brewing, and just like with pretty much every other asset that's linked to dollar, which is basically dollar denominated, is going to catch up at some point to supply. Money supply. So, I personally don't really believe in cryptos that much. But if you had to ask me, a month ago when we started talking about it, I said, if you put a gun to my head, I definitely buy this. So,
look, people are going to be looking for assets to hide from inflation. I think we're going to be dealing with a period of probably stagflation, where we're going to have inflation and just very little of zero growth, which is a stagflationary type of environment. But that's also going to attract people to assets like gold, Bitcoin, crude, just assets that are like that. But real quick before Dale takes over, the reason why I wanted to mention this is if I didn't get to the analysis of something that you wanted to see. So remember the basic technical analysis, it's updated by myself and the rest of the team throughout the course of the week. And you'll get either the end of day analysis or intraday analysis of these basic technical analysis is going to come from me throughout the course of the day. Also want to talk about really quick, we were talking about crude and where crude's at. Crude, I think, is at a really big important resistance. Let me get to it here at 42. And this is one of those, we talked a lot about it regarding the Canadian. This is all the breakdown point, the lows from 2017, the lows from 2018. We keep knocking our head up against 42, and it's also the 200-day moving average on the continuous contract. So if crude continues to be weighed down here and not break above 42, that's going to be eventually bullish for the dollar Canadian. So think about that, guys, when you're trading around. It's if crude can't break and it starts to break through like $40, that's just going to be a nice little boost to the dollar Canadian, in my opinion. So Stelios, I'm going to pass it over to Dale from here. Anything else that you wanted to mention?
No, I think we covered a lot of stuff, and looking forward to the interview. So thank you, Blake, for doing all that today.
Oh, hey, and by the way, tomorrow we're going to have
Andre And
Andre.
Wednesday's Gregor.
Wednesday is going to be Grega. Thursday will probably be Paul Franco that does the European crossover. So you guys will have other team members on throughout the course of the week. So thank you guys for tuning in, and Dale, have a great interview today.
Thank you, Blake.
Thank you, Blake.
All right. Thanks, guys.
Okay, Erkin, I see you. I'm going to get you set up here. There you are. Hello, Erkin. Welcome to FACE. Very nice to meet you. Asking you to unmute.
Unmute, yes. Hello?
I think I hear you. There you are. Nice
Hi.
to meet you, Erkin.
Nice to meet you, Dale. How are you?
Good. Have you ever used Zoom before?
Yes, of course. Yeah, I used it.
Okay, who hasn't, right, nowadays? So to share your screen, there's a green box in the drop down menu.
I know.
Okay,
no,
buddy.
No problem.
I've used it 1,000 times and I need to be reminded. So I'm very low tech.
Yeah, I'm kind of rare.
Okay.
Will you ask the questions or will still...
Yeah, I'm going to ask the questions. I'm waiting
okay.
for you to share your screen. Do you want to do that, or you want me to share mine?
Sure. No problem. Yes, here we go.
So the first question is, how did you get involved in this industry? Tell us a little bit about your journey and how you got to where you are now.
I'm an economics journalist, actually. I started doing the business in 2003 in Turkey, in Istanbul. Later, I started working for Dow Jones Newswires and the Wall Street Journal Group. I was producing stories for them in English from Turkey. And later, I was transferred to Al Jazeera Network. In that television, I found opportunity to make a deep research on 2008 crisis. And so when I made this deep research, I found that some unbelievable information. I found that the international monetary system is about to change, and the dollar system is about to change, and it will be replaced with something new and most probably related or maybe depending on something like gold or the similar monetary assets like silver or even Bitcoin. And I wrote a book in 2013, which has got a title. Maybe I can show the title.
Yeah, sure. Go ahead and show it.
Well, on the screen. Let me find it first.
So you really came from a journalistic background.
Yes.
Yeah. So you had talked as a journalist. You were probably out there. Intelligence gathering, which I'm a big believer in, talking to experts, to other experts, to learn and put together your thesis. Were there any people that you credit giving you insights into what you published and what your thoughts are?
A lot of, first of all, Ben Bernanke and Alan Greenspan, their statements and their policies, and many other people like Nouriel Roubini. How can I say? Maybe other investors like Warren Buffett, Mark Yusko, many other people. And when I brought all these data and speeches, I found that the system is on the brink of a very big change.
Is that what gold is currently signaling, and silver, and more recently dollar weakness?
Definitely. I predicted that in my 2013 book, and the book. If I can share the screen.
Okay, so what you do is you hit new share.
Okay,
If it's
I
on a
fixed
different.
it. I fixed it. I guess
Okay.
now it will be opened in.
So
pictures.
you know, Erkin, in our business, the if is not as difficult as the when. The
Yeah,
art of this business is the when,
Yeah,
right? Because
I
people have been
definitely
saying
know.
this. Oh, come on. I mean, back to when I was new in the business, but you could go all the way back to the 70s and find things
Yes,
about the
sure,
death of the dollar after we came off the
sure.
gold standard. So you have an idea of when's? Oh, there's some nice charts. Okay, go ahead.
Yeah, you are definitely right. And why this is not working? Yeah. Now, can you see the?
You have a blank screen. You have nothing up right now. Prior, you had some charts. Jamie Dimon was on it. I think it would have to do with
Let's
probably
sharing again. Okay.
Yeah, share again.
Yes. Now you can
there's your
see it.
book. Yeah.
Yes, this is my book. Its title is 2020 Big Crisis, Wonderful Opportunity, New Economy. So for timing.
Oh, nice. And that was published when, in 2013?
Yes, definitely. October 2013.
What led you to believe 2020 was the year? Certain cycles or just your?
I calculated cycles, previous recession cycles, and over it I put Ben Bernanke's famous speech. It must be in 2002 or something. Make sure deflation doesn't happen here. Speech, and that speech was giving you the stages. What will the Fed do in the future when something like 2008 happens?
Right.
And by bringing those two together, previous recession cycles and the roadmap of Ben Bernanke, and when I wrote the book in 2013, all the stages were already almost completed. One stage was missing, big tax cuts. And that is done by Trump after he was elected.
Okay.
And the scenario definitely completely realized, and my prediction was a hit. And I guess I have the world record on this, because later many people, including Ben Bernanke himself, predicted there will be something big in 2020, but they started issuing their predictions after 2018.
Yeah, you were early.
Yeah.
Is COVID an outlier to this whole thing, or is it possible that you saw something like this coming as well?
In the book, I said that something natural could trigger the issue as well, and that's where COVID comes into play. And the real cause is told by this graph. It's total credit market debt as a percentage of US GDP. Yeah. We had a bigger pandemic, more lethal, which killed 50 million people around the world in 1918 and 1920. Yeah. And when you look at this chart, there's no credit bubble at that time. So there was no financial crisis at that time. We don't remember a big financial event in between 1918 and 1920. We have a mild recession, but we don't have a crisis. What we see here in 1929, there is a credit bubble. And after 19 1980 period, in which the US broke the ties between gold and US dollar, you see the credit bubble skyrocketed. And that's the problem. That's the weakness of the economy. So any natural cause like COVID would pull the trigger. It was obvious.
Okay. All right. So looking at this chart, I noticed that we had a crash even though credit was still expanding. And right here, what year do you call the real money Dow peak? That was probably based upon not adjusting for nominal gains with the dollar weakness. Is that correct?
When you calculate the nominal gains and real gains, you still have big gains in gold and silver.
Okay. Well, I'm talking about your real money Dow peak. What year was that? 2000?
I don't know.
Well, it's on your
no,
chart.
You mean here in the graph?
I mean where you have printed real money Dow peak with an arrow. That's before, and then it continued. The credit expansion continued. What do you mean by real money Dow peak? That was subtracting. Okay,
you are
that's
saying
what
this,
I meant.
This point, real money Dow peak. I don't know. I didn't make the graph actually. I don't know what they mean. I don't know what they mean.
All right. Well, all right. Anyway,
I never noticed that point on this graph.
Anyway, that's okay. So we'll have to put out a tweet and say on your interview.
Maybe they are referring to Dow Gold ratio.
Oh,
and,
could be.
They may be predicting. They may be indicating the 2000 stock market Nasdaq bubble.
Okay.
Yeah.
All right. Yeah, it looks like it's around 2000 where, even though we've had bull markets after the dot-com crash, there are a lot of people that believe we started a secular bear market in 2000, even though the market doubled in value over that high. So,
of course.
All right. So here we are, a few months away from an election. Does this play into your narrative at all?
Sure, election is also an uncertainty. I guess despite the polls, Trump has got a significant chance to be elected again, but it's still uncertainty, and there are three big reasons pushing gold and silver and also Bitcoin up nowadays. First of all, uncertainties, because we don't know what will happen about this COVID-19 health issue. Will it recover all over the world, or will we face another second wave in the fall?
What do you think?
I guess it's probably will get worse in fall.
Okay.
And because especially in the United States, they are not administrating the problem properly. Even in Turkey, there are some problems here as well, but we never had a discussion like, should we wear masks or not? It's a very important problem.
Let me ask you this about Turkey, because it was one before the dollar started turning down quite forcefully here. The lira, the Turkish lira, has been in a bear market. To me, it seems like forever. And Erdogan didn't want to use interest rates to support it. And what's your view, and how did the Turkish people handle currency depreciation? Because most populations, I don't care what country you're in, really aren't that sophisticated to know how to protect themselves in a currency crisis. How did your countrymen handle it? And what's your outlook for the lira now that the dollar is finally weakening? Could the lira rebound?
I don't think so, first of all, because the central bank doesn't have any proper US dollar reserves at the moment to facilitate a rebound in Turkish lira, and we have got a lot of debt payments to do. And
well, you know, what you just mentioned is the dollar bulls argument for not a dollar crash right away, but a huge dollar rally that could occur first before we move into this new system, which creates a deflationary bust. So I could understand how gold could go up if we're going to have a deflationary period. Or are you of the mindset that we're headed towards not just inflation, but extreme inflation? What is, would you look at credit expansion? When the credit bubble pops, isn't that deflationary?
Sure, I guess the first we will have a deflationary environment again, like we had very shortly in March or in 08. First, we will have another deflationary wave, and then the central banks will start another round of money printing, and which will bring us to extreme inflationary conditions. But in Turkey, this doesn't matter because Turkey's metrics data is very different, position is very different, and Turkish people are used to high inflation. From 70s to 90s, something like 20 years, Turkey was subject to inflation rates, annual inflation rates of 50%, 100%, and so on.
Well, how do people get by if their income doesn't increase by that much? What happens?
Everybody was adjusting themselves.
How do you adjust to
inflation?
To losing purchasing power like that? You don't eat?
not
you
like
don't
that.
Go to the doctor? You ask your landlord to, how do you do it?
Everybody was increasing the prices, and of course they were increasing the wages as well. It was not like Venezuela.
Okay, so wages went up with the inflation.
Of course, they were losing their purchasing power, and the environment was terrible. But they learned the way they how can they survive in this environment as well. And by the way, gold is a very how can I say, traditional investment in Turkey. Every household has got gold in Turkey. When you make a wedding, everybody, all your friends and relatives bring gold to you. These are traditions, and gold money is invented in Western Anatolia, in Lydia kingdom, 600 BC. So there's a very strong market for gold in Turkey, and very strong tradition for investing in gold. And I guess in this last gold rally, which started in 2018, Turkish people made nearly $100 billion in terms of revenue from gold, because in Turkey, according to the prediction of World Gold Council, some 5,000 tons of gold is held by households. It's not in the financial system. So it's a way to protect yourself against inflation.
So they had the history for doing so, not as much as perhaps the U.S., although I've heard stories how gold coins saved people during the 1930 depression here, that people that had a few coins buried in a coffee can helped them survive that depression. So so someone's asking me this in our attendees: why has the Turkish lira not moved in price for the last month?
Because Erdogan administration actually closed the doors for
Oh,
foreign,
there's capital controls now?
not officially, but
Okay.
they closed all the swap lines, so it's an unofficial capital control and fixed rate regime now, which makes me happy as an investor because I don't need to worry about the US dollar at the moment. But I know when what happened last time they did it officially in 2000. Turkey implemented an official peg for US dollar, and it caused the worst financial crisis in Turkish history. I hope it doesn't happen again, but history tells a different story.
Okay, so let's talk history. If
Okay.
you're talking about global depression, you know, I know some people, and I want to know what you think is 2008. Okay, so the everything bubble. Okay, that's a nice chart. Why don't you keep it there?
Okay, I can keep it.
The depression, if it could be triggered, I know some people that are thinking that ground zero, unlike 2008, which was derivative paper on real estate here in the US being the trigger for the global Great Recession, that this time it's going to come out of Europe. A lot of people looking towards possibly Italy opting out of the euro. What's your view on what's going to happen to Europe? Is there still a threat? You know, all the people who are looking for the euro to trade under parity, is that now off the table or still on the
No.
table?
Still on the table, of course. If a second wave hits about this COVID-19, which is the base scenario for IMF. You know, in their last report, they said that our base case scenario is a second wave will hit in early 2021. So if another wave of COVID-19 hits, Italy and Spain would be in very difficult condition. So,
well, weren't the Italian banks almost zombie banks anyway before COVID?
yeah, of course.
Okay, so
But,
I mean, everyone's. Go ahead.
This euro thing is not only a financial and economic issue. It, despite all these difficulties, they could remain in euro, and European Central Bank could try to take more measures to save them. But of course, they will be in whole Europe will be in very difficult conditions if the second wave hits.
Worse than the US?
They are worse than US in you know, every condition because they don't have a proper administration for whole Europe. Everybody is saying something different. They don't have
That's
a
right.
policy.
Because it's not a federal union.
Yes, and their banks are in very bad shape, and their population is very old. They don't have innovation.
Okay, demographic argument too.
Yes, yes.
How about China, Erkin? What's your view with all of this happening? Is this China? You know, a lot of people have been talking about the ascension of China, the yuan being part of maybe a new SDR or whatever. What do you think? They have plenty of debt too. It's harder to know. They're pretty opaque. But do you have a view on China during this scenario?
China looks very similar to the United States before 1929 at the moment. They have a huge credit bubble, excess producing capacity, but the markets they need to export are closing. So they are on the brink of a deflation event similar to the 1929 big crisis, Great Depression. Maybe they could soften this with central planning. I mean, maybe they could achieve a policy which would not cause people starving. But they are not in good shape as well. Of course, there is something big happening in China. They are increasing their production capacity, and they will catch and most probably pass the United States as the world's largest economy in the coming years. But it doesn't mean that they have no problem. Everything is okay for them.
Yeah, maybe they come out of the reset better than.
Yeah, maybe. And we don't know what politic results will emerge from that kind of depression in China, because traditionally Chinese administrations always fear of an uprising from,
Yes.
especially the lower classes. That's why they are actually like something like fetishist about this growing economy. Because if they not grow the economy, they know that people will revolt, and they have a lot of problems as well.
Okay. I like to ask people who have not exactly the same type of bearish view that you have. A lot of bears have different reasons for looking for negative outcomes. I like to ask people that feel this way and see what type of, problems and crises that are coming down the road, where they're going to ride it out. Are you going to ride it out in Turkey?
Sure, I have my plans since 2013 when I wrote the first book. I decided to play on limited supply monetary assets, because the central banks will flood the world with unlimited currency. So I decided to invest on gold, silver, Bitcoin, and some altcoins.
Okay.
And it's going very well up to now.
Okay, well, that's the financial side.
Mm-hmm.
Now, what you describe, and we're already seeing it happen here in the U.S. with COVID, is there is some social unrest beginning to build. So you could have all the gold and silver you want, and if someone comes at you that's armed, you can't throw a Krugerrand at them, hit them in the head, and think that's going to stop them. So with all this social unrest, do you recommend that people seek out certain havens where it won't be, where they could watch it on TV instead of being in the middle of it, Erkin?
Sure, that's another part and very important part of the issue, the problem.
Where would be a couple of good locations?
I would not have. I made a video on this on my YouTube channel,
okay.
And I discussed the two approaches. What was the English name? Dug in or dug out, something like that. Bug in or bug out.
Oh, bug out. Yeah,
bug out. Yeah. Would you prefer to stay in your location, in your house, or would you prefer to go out with all these equipment and etc.? And in Turkey, people are considering to go back to their villages because it's still vivid here. They have got relatives in rural areas.
Okay. Get out of urban areas like Ankara. Okay.
Not actually. Ankara is a big city in Turkey. For example, every city has got rural areas, even Istanbul. And now I said in that video that it doesn't matter if you bug in or bug out. The important thing is you need a network of trustworthy people around you, because you cannot survive alone. Forget about that. If you have relatives in the rural area and if you are good with them, go and
Even
visit them.
even mother-in-laws.
I don't know. If you are good with them, why not?
I tell you what.
I was very good with my mother-in-law when I was married.
Okay. All right. You know,
Some
I'm
4
just
years
kidding.
ago.
All you mother-in-laws out there. I don't want to have a million emails.
Okay.
Mother-in-laws are, looking after their children's interests. So, it was eye-opening here, Erkin. Do you have any kind of uh, I know a lot of people think that what's happening in the U.S., all the liquidity that the Fed is pumping into the economy, that this isn't as much about liquidity as it is about solvency,
Sure.
and liquidity cannot solve a solvency issue. Do you
Yes.
agree with that?
Definitely 100%.
All right.
Before the COVID-19, because of this huge credit bubble, let me show
Zombie companies.
again. Yes,
Yeah.
definitely. There was some, maybe according to the BIS numbers, 12% globally, and with some calculations, 20% in the US. There were zombie companies already. So when this COVID-19 thing hit the globe, now they are in a much worse position. And even very famous companies were already zombie companies like Tesla, like Netflix,
Right.
and this will turn into a solvency issue. You are very right, and we will see it when the second wave hits, or even the second COVID-19 wave wouldn't hit. We need to see if the Federal Reserve printed enough money to cover the dark hole created in the economy.
Okay, we have a Fed meeting this week, and I know you told me you had some other interviews today. Why don't we wrap it with what do you think the Fed's going to say this week? Everything's great. Everything's okay.
I think they
Don't
will
worry.
say, "Don't worry." First of all,
yes. Okay.
They will not change the rates. Of course, they will say that there will be no negative rates in the United States, but they will also say that we will do whatever needed if other dangers emerge.
Okay, well, I want to thank you, Erkin. Anyone who goes through an interview with me becomes my trading warrior brother. So,
thank you very much.
You survived it, and there were a lot of eye-opening things. I'd like to have you back sometime in the fall, so we could see what's happening. And I really appreciate you coming today and fielding questions and edifying the FACE community. Thank you, Erkin.
Thank you very much. It was a great pleasure.
All right, I had a good time. We had a few laughs, so good combination of compelling information and fun, right?
Yeah, thank you very much.
Okay, buddy. So everyone, you could follow Erkin. Do you have other places? You mentioned your YouTube channel.
Yeah, you can.
Okay, I have to ask you one more thing.
Sure.
What is the Wizard of Two? TWOO.
Normally, it's Wizard of Oz.
Right.
Of course. I think I forgot it why I did that because it's a sub Twitter account for me. It's a backup Twitter account. My real Twitter account is dash Erkan Oz at dash Erkan Oz.
Okay. Because I found you on this one.
Yeah.
Okay.
Sorry.
Well, are those the two places people could find you? And
yeah, I'm mostly active on Twitter and YouTube. And if you type my name on YouTube, Erkan Öz, you will definitely find me.
Okay.
And of course in Twitter as well.
Okay. So as a resource for what may lie ahead, and congratulations on writing in 2013
Thank you
that
very much.
2020 was going to be a key pivotal year.
Thank you
Appreciate
very
you being
much.
with us again, Erkin. Good
Thank you
hunting,
very
buddy.
much.
And
You
may you and
too.
your loved ones remain untouched.
Of course, and same
Inshallah.
feelings for you. Oh, great.
Inshallah,
Thank
buddy.
you very much.
All right,
Thank you
brother.
very much. Bye.
Take it easy. Bye-bye. All right, so
Bye.
that's a wrap, everyone. Hope you enjoyed listening to Erkin. And don't tell me that worrying doesn't work, because almost everything I worry about doesn't happen. And don't just count your pips, count your blessings. We'll see everyone for Turnaround Tuesday. Adios. You're very welcome, everyone.